Okay, so the accrued expense adjustment is one of the 4 balance day adjustments, and we don't need to worry about GST on this one. Alright, so here we've got interest on loan is owing $120. Now remember that while loan is a liability, the interest on the loan is actually an expense. Okay, so before we do this adjustment, the first thing we need to do is work out whether it's an asset or a liability. Now, owing means that we need to pay it, okay, and because it's an expense that we need to pay, it's going to be an accrued expense. Accrued means owed. If you owe something, it's a liability. Alright, so once we know that it's a liability, we can create the accrued expense account and put it on the left hand side. Okay, so I'll just shorten that. Accrued expense. Remember, you can never shorten them because you're the one being examined. So the accrued expense account is that full amount of $120. Just because it doesn't say that it's GST exclusive, you can assume that it is. Okay, you're never going to have to work out GST on any of the 4 main balance day adjustments. So we've added our $120 onto the liability side. So the last thing we need to do is adjust the other side, which is our interest on loan account. Okay, so we added $120 to the right. Because interest on loan is on the left, we're going to add as well. Alrighty, so there we go. Just remember that once you've worked out that it's an accrued expense, okay, an expense that is owing, then you need to decide that whether it's an asset or a liability, and then the rest is pretty straightforward. Alrighty, so your general journal entry will look like this. Interest on loan is an expense that is increasing, it's a debit, and accrued expenses is a liability that is increasing, it is a credit.